हेलो फ्रेंड्स, वेलकम टू सेंट्रिशाला, आपका वेल्थ पार्टनर. And I am Aditya Shankar. Along with me, I have today Sachin Jasuja, who heads equities for Centricity. The topic of today's discussion is an emerging and very important asset class, or rather a sub-asset class within equities called pre-IPO equities, or what is commonly known as unlisted equities. What we'll be discussing in this video will be various facets of this sub-asset class and how to pitch and position this sub-asset class when we are discussing the same with our clients, with our partners, etc. And how exactly to convey that this sub-asset class really, adds value to the portfolio and adds impetus to the returns as such. So hi Sachin, welcome to the show.
Hi.
So Sachin, just wanted to understand what is exactly the definition of pre-IPO equities or unlisted equities or whichever way they are called, and what is the purpose of why would somebody want to invest in these instruments?
All right. So as the name suggests, pre-IPO theme, it means these are the companies which have not hit the stock market yet. I mean, they are not listed on BSE or NSE as of now. There may be some chances that it may get listed. They may file the DRHP. They may come up with the IPO.
Okay.
But as of now, they have not raised money from the public. So that's why these are called pre-IPO theme or the unlisted. I mean, these are not listed on the exchanges.
Right.
And why somebody should consider this kind of investments. See, when we talk about 5-6 years back, till 5-6 years back, so these opportunities were only available to the institutions, and they were doing big deals into these companies which are growing faster than maybe the industry peers, the listed peers. Wherever they found that the management is good, the corporate governance is good, and there is a valuation gap also as compared to the listed peers. So those institutions used to buy the stake into such companies, and then they used to offer it to the HNI clients through their funds. But now, we have seen the trend of ESOPs in last 5-7 years. There are many employees who are having big chunk of, companies' shares. Even those companies are not listed yet. Those shares have come in the market. Even institutions have started selling directly to the HNI clients. Now these shares are floating, and the market is growing every day. When we say about this unlisted, companies, this can be any company. Even it can be a hotel, restaurant. Any private company can be considered an unlisted company. But here we are talking about the companies which are maybe into the late stage. They are growing very fast. Their valuations are very comfortable, maybe much attractive as compared to the listed pairs. They may be growing faster than that, and they may be even bigger than those companies which are listed. So we have to evaluate those companies, that why one should go for unlisted unless we don't find such great opportunities of growth. Otherwise, the listed market have a lot of opportunities, but the unlisted segment is growing, and there are some opportunities which are very, very attractive, which should be considered.
So let me summarize. So for example, if venture capital fund, private equity funds have purchased stakes in these unlisted companies at a very early stage, and now since these companies have grown, and certain multiples have been already earned by these funds, they exit into the private markets only. Secondly, many early stage employees, CXO level employees must have received employee stock options, which probably they want to exit because they must have made those multiples in terms of returns.
Everybody has different kind of aspiration also. Somebody wants to buy home, somebody wants to invest somewhere else. So these shares, they generally sell in the market.
So this is how the liquidity comes.
Yes.
But my question is, and I have heard, many people have asked me this question, that why shouldn't we just wait for the IPO to come? We can, possibly buy it post the company is listed. If the opportunity is so close to listing, why shouldn't we just wait and then buy post the listing rather than buying it before listing?
So there are two answers to it. I'll take first one. Even if we want to wait for the IPO, so we have seen many examples. Recent was Tata Technologies. So everybody was convinced it's a great company, and after 26 years, Tata has come up with the IPO. It is into automotive designing and automotive technology. That is the future, right? But still, many investors participated in the IPO, but nobody could get anything. Even if somebody got the allocation, maybe 14,000, 50,000 against 2-3 crore kind of application, right? So the allocation was not there. If there is a good brand, high growth company, the market identifies it at the time of IPO, and then everybody jumps on it, and people don't get it. So better is if you can get it before the IPO. So that brings the opportunity. Now, second thing, there may be valuation gap, when most of the companies, when they come up with the IPO, they come at a very good valuations. They compare it with the listed peers. But when there is no news of the IPO yet, when the DRHP is not even filed yet, because these companies are in very limited hands, so the valuations are generally not up to the mark as compared to the listed companies, right? So there is a valuation gap. So there can be a alpha of around 40 to 60% also as compared to some listed competitors. So better to get in those companies then only, obviously after taking consultation from their advisors. But yes, these kind of opportunities exist. So it is better to jump on these opportunities before IPO if somebody can advise you well.
So basically, the allocation, the probability of getting a desirable allocation
Yes.
is much more higher when we are participating in the unlisted space.
Yes.
Because you may not get as much allocation as you want for the money that you are paying. And second is that you might just get in on a very good valuation as compared to a higher valuation post listing or during listing.
Yes.
During the
Because once the IPO hits the market, it's like it comes under little euphoria.
Yeah.
But it is always good to participate when there is no euphoria, when very limited hands are exchanging those ideas. And it's always good to be early backers as compared to the entering at the late stage.
So how do we identify these opportunities? Like you said, any company which has not tapped the equity markets and which are not listed on the indices can be categorized as unlisted companies.
Yes.
So how do we identify those very limited out of a very large universal set? How do we identify which ones to pick?
Okay.
So as a company, as an institution, how does Centricity decide? Or how does Centricity research which are the opportunities which are worth pursuing and which will add value or which will give that kicker to the returns overall?
Yeah, very interesting question. So I think that's where the Centricity plays a major role. What we do proper analytics of these companies, and what we do, we generally evaluate those companies only which are growing very, very fast. In fact, growing at almost double the rate as compared to the listed basket. So we are not even talking about that, okay, there is a company which is just growing at par with any listed peer. So I can give you a few examples. We know, mutual fund industry is growing, right? And the AUM has touched almost 50 lakh crore worth of AUM. Now, there are many listed companies in the market. We talk about HDFC AMC, Nippon AMC, UTI, right? So almost all the companies are listed over there. But the major player SBI is not listed yet, right? And okay, that is the part that it is a dominant player, still it is not listed, so it is worth considering for evaluation. Now, when we found out, okay, that SBI, how it became the largest, their AUM has been growing by more than 25% in last 5 years, whereas other AMC has been growing by 15 to 20%, right? And their PAT growth has been growing at almost double the rate as compared to its closest competitor. So when we found those kind of anomalies in the market, okay, there is an unlisted market where the companies are even bigger than the listed players. They are growing at much faster rate. The industry tailwinds are there. There is good scope of wealth creation in next 5 to 10 years. When those parameters are there, and you also check the corporate governance, the evaluation parameters are almost same as you value any stock. Whether it is a listed or unlisted, the evaluation parameters are not very different. So what we do, we make analytics about it, and we present to our clients. Then they can take their call by just comparing that whether it is worth investing or not.
So Sachin, as we know that when a stock is listed in the indices, the price of that share is determined by a lot of factors. It could be the liquidity of the stock, and it could be determined by the, obviously a very huge factor is the actual performance of the company in terms of financials, progress, traction, etc. And also the demand and supply of the stock. If there is less liquidity, probably, it is the valuation or the pricing is very different from a stock which has high liquidity. So in a unlisted stock, how does these factors work? So how do we determine how is the price determined, or how does the price discovery happen? And how is the the outperformance or underperformance of the company factored into the price?
All right. So I think that's the most relevant thing while evaluating any stock in the unlisted format, because it creates opportunity also, the low liquidity. see, these companies are low liquid as compared to the listed companies, right?
Yes.
Because till now, these companies are not among the public, normal public. So there are less buyers and sellers, limited hands. So there will be less liquidity. Few unlisted stocks have gained a lot of liquidity, but there are many companies which are still very illiquid. So when the illiquidity is there, then the price discovery may not be as perfect as the listed market shows, right? So it creates opportunity also, and it creates, in this kind of scenario when there is a low liquidity, even it can be manipulated very easily also. So we have to be cautious that we are not getting into any stock which are into euphoria and at a very extreme valuations, right? If it is not justifying that growth, that valuation is not justifying the growth, we generally avoid. We don't want to even study further. So, but we also know that because of the low liquidity, some stocks are trading at very attractive valuations as compared to the listed companies. Or you can say, even if we don't compare it with the listed companies, if there are companies which are into emerging themes, which are maybe into the themes which are growing at much faster as compared to the economy, overall economy, but they are still being traded as the overall broader market valuation. So we know that it is very attractive valuations. So when these kind of things happen, the low liquidity, then we are only finding the mispricing or some opportunities where we see that, okay, there is a good gap alpha of 60-70%, and across time we are also, at least considering that these companies can generate more than 20% kind of IRR in next 3 years. Only those companies where we see such potential, then only we are entering into or we are evaluating those companies.
Sure. So, my next question is a little operational in nature.
Okay.
So, let's say, and of course, before that, I just wanted to say, so this background homework, this, homework prior to suggesting or,
Yes, yes.
taking these opportunities for client, all of this is done by Centricity.
Yes, yes.
Because we have a RIA license also, we have a research analyst license also,
Yes,
etc. The next thing which I wanted to ask is a little operational in nature. For example, if one has decided to buy an unlisted stock, what is the process? As in, how does one do it? For example, if one has a broking and demat account and a
Yes.
trading account, one can easily buy stocks of the indices. One can buy any kind of stock. How does it happen in the unlisted space?
Yeah, it is almost same, though actually the modus operandi is very, very same, though many people are not aware of it, investors are not aware of it. But if you have got demat account, you can buy these shares. Centricity offers these shares, you get the pricing list every day. As the market, there is change in the stock prices every day in the market. Same in the unlisted market, now the liquidity has gone up, and every day there are changes in the stocks prices. And we offer you the deals, and once the client confirms that deal on the email, and then we ask for the funds, the client transfer the funds to our demat, our bank account, and we transfer those shares to the client demat, and everything happens in T+1. I mean, within 2 days, the transaction is completed. Yes.
Both legs of the transaction are closed.
In 90% of the unlisted stocks, there are few unlisted or pre-IPO themes where ROFR is there, right of first refusal is there with the senior management of the companies. So once we get that approval, then we transfer those shares. But this is limited to only 2 to 3%, you can say, of the companies. But most of the companies are freely tradable shares, which can be, the transactions can be completed within 2 days.
And similarly, can the investor sell these stocks also?
Yes, yes. Yes, the investors, see, once it is in your demat, you are free to sell these shares to anybody.
And what are the documents that one requires to make these transactions? As in, there must be some basic documents.
Yes, yes. For transferring the shares, see, the client must have the basic KYC. It is PAN, Aadhaar card copy, and CML, which is a client master list, because it carries your DP ID and client ID kind of details, and the cancel check, where it shows that from which bank we are getting the funds. So there's a basic KYC which is required for any transaction in the unlisted space.
Understood.
Yeah.
So the last thing which I want to discuss with you is that are there some examples which come to your mind, from the near past, in the sense
Yes.
in the last 5-6 years,
Yes, yes.
where there were some unlisted equity opportunities that were available, which were bought successfully by large funds or even individual investors, and then post the listing, currently the prices are fairly high, so the pre-IPO investor, has been substantially in the money and bagged multi-bagger returns. So can you name such some examples?
So the recent I just discussed, it was Tata Technologies.
Okay.
So Tata Technologies, even we have been, I think placed this company in most of our investors before the IPO. And for last 1 year, it was trading in the zone of 450 rupees to 800 rupees, you can say. even though the IPO came at around 500, but the listing happened at almost 1200. So if I take the average, so almost 600, 700 was the buying price for the investors a year back, and now it is trading at 1200. So it is 100% kind of gain for the investors. Same way, if I go back, 4 or 5 years back, so ICICI Lombard, I remember in the unlisted space, it was trading at around 400, 450 level. The IPO came in the range of 600, and now it is trading at almost 1300, 1400. So almost 2.53 times kind of money in 5 years. So there are many such examples like Bikaji Foods, D-Mart, Avenue Supermart. There are many examples where we have seen that at least 3x to 4x money has been earned in last 5 years. So if I take basket of the companies which we started doing, 2 years back, which we started suggesting to our clients, the IRR has been more than 35% in last 2 years. So it has been beating the markets, and most of the companies are doing quite well in terms of business. Still, the price discovery as compared to the listed is yet to be done, but still overall the basket has gone up by more than 35% in last 2 years. So on a IRR basis.
Right. So would you say that pre-IPO opportunities are a replacement for listed stock portfolio or equity mutual fund portfolio, or do they support or complement the portfolio as such?
I think it complements the portfolio. Still, we know that in listed market there are thousands of companies.
Yeah.
And there are a lot of opportunities in the market. We continue to do that to find such, mispriced opportunities and the companies which are growing at much faster stage. But on the unlisted side, there are, you can say, active 200 to 300 companies only. And out of that only, what we see, where we see that the pricing is very attractive, the liquidity is there, the client can easily exit. So it would be a handful of companies, maybe 20 to 25 companies, which can be considered or worth investing. Other companies need more evaluation. As they grow, as the liquidity goes up, then the clients can consider, investing in those opportunities. But definitely the listed market is way huge as compared to the unlisted. So the unlisted or the pre-IPO theme, because the liquidity is little less as compared to the listed one. So I think
kicker to the
it gives you kicker as a overall portfolio.
So I think, as we have always stressed in Centricity, I think the portfolio should consist of all kinds of instruments.
Yes.
There should be proper asset allocation done, goal planning done as per the background and the inputs given by the investor.
Yes.
So pre-IPO opportunities or unlisted opportunities is definitely not a replacement for equity mutual fund, equity PMS and listed stock portfolios. So it rather acts as a complement or something that gives a kicker to the overall equity portfolio returns.
Yeah, and just to add on to your point, Aditya, as mutual funds, PMSs are the best asset class because the fund manager is taking decision, they are doing the risk analysis, etc. So it is always good whenever any investor invests into these pre-IPO opportunities, it is always good to build a portfolio around it by not going for only 1 or 2 companies. But wherever they are also convinced, we have rolled out around 12 to 15 companies with proper research and analytics. They can evaluate, they can find whatever suits to them, maybe 4 or 5 companies, can build a portfolio around it, and then they should invest rather than going for a single company.
So I think it was overall a very, very informative session. Thank you so much, Sachin.
I
think it was very helpful for not only our business development team, but also for the partners.
Yes.
And it will definitely help. I'm hoping it will definitely help partners in interacting and taking this sub-asset class to their own investors. Thank you so much, Sachin, for
you very much
for your inputs.
Thank you, Aditya.
And thank you, viewers, for viewing. Please like and subscribe, and hope this session helped.
Thank you very much.